Now I want to take you over to see the positive market conditions. I want you to note that on my positive market conditions list, everything in green was extracted from the negative list. And I'm going to show you how all of those things are truly positives. There's only one line item on this slide that's different from what I just showed you as a negative. Okay? Interest rates are at historic lows. The buyer pool is smaller. We just talked about that. But let's see what that really means. Buyer pools ebb and flow, and they traditionally look like this. They ebb, they flow, they ebb, they flow. And then there was this big bubble. This was the bubble of 2004 to 2006. And do you know what this is? It was liberal lending, and it created this huge falsified buyer pool. And now we're starting to see this again. The market is not bad. The buyer pool is not bad, and it's not small. It's corrected. It's healthy. This was an unhealthy buyer pool. Mortgages are more difficult to get. Absolutely. But is that really a bad thing? Back in the peak of the market, everybody was getting a pre-approval. But many of them didn't make their way to the closing table. That's number one. And many of them that did are now foreclosing on their houses. So now you could rest assured that because mortgages are more difficult to get, the buyers that are showing up with pre-approvals now are definitely more qualified than the buyers you saw in that false buyer pool. This is my favorite thing in my presentation. Houses are selling for less. I bet you can't imagine how I could say that this is a good thing, but it truly is. My artistry is not that great, so bear with me. To make the point, this is a little sailboat, and this is my big yacht. And the little sailboat has a value, and the big yacht has a value. These are the water. When the water tables drop 10%, both vessels drop at the same rate, regardless of their value. But in real estate, it's different. I need an assistant. Okay.
Is that a cue?
No, I'm good. Okay. Now let's look at what that means in real estate language. Okay? Here's a more modest house at $300,000. And here's a house that you want to trade up to at $500,000. Unlike the water tables, when the real estate market drops at 10%, both do not fall at the same rate. This $300,000 house that dropped 10% is now worth $270,000. This $500,000 house that just dropped 10% is now worth $450,000. So what happened here? This seller says, woe is me, I just lost $30,000 on my house. But really what happened is, the house they're looking to buy just came down $50,000. This seller who thought they lost $30,000, saved $50,000, they're up $20,000. This is the perfect market to trade up in.